If you'd like to see more of our videos, hit the subscribe button to stay on top of the market news. Good morning, traders. Welcome to today's market review. This is Fred Razak at CMtrading. Today's September 1st, 2020, and today is Tuesday morning. So looking at the highlights of the day, the euro, the Australian dollar, and the NASDAQ rally to new all-time highs. But first, let's take a look at the economic events of the day. So we're starting out the month with a couple of events later today. First of all, earlier this morning, out of Australia had a RBA, Royal Bank of Australia rate statement rallying the Australian dollar. And at 4 o'clock South African time, very important number coming out of the United States, ISM Manufacturing PMI number coming out. Now this Friday is a non-farm payroll number coming out for the month of August, so just be aware of it. Now looking at the markets, we saw the British pound, the euro, and the Australian dollar gain versus the US dollar as it weakens. And looking at the indices, the NASDAQ trades to new highs, while the stocks really don't trade to new highs besides for Apple. The Dow Jones pretty much fizzles and sells off a little bit. And the commodities, gold gaining some momentum on its upper limit, and oil pretty much fizzling, okay, not showing that continuation. Lastly, looking at the stocks, Apple stock is having a 4-to-1 split. Amazing, okay, in the effect new highs. Okay, it's traded up to $516 pre-stock split, so just be aware of it. So lots of things happening. So let's take a look at the markets and see what we can expect from today's trading. So we're taking a look here at the EURUSD at a 4-hour chart, and pretty much you can see how nicely this has gained above this area right there. 1964 was that resistance-ish area, and we broke right through it. 1981. Now the next real resistance-ish area is somewhere at 1.2, okay, 1.2 is really the next resistance-ish area. Now if we look at it at a daily chart, you could see that we've hit all-time highs so for the year for sure. And looking at a weekly chart, this has really been bringing us back to 2018. We haven't seen this likes in a long time. So next real resistance-ish level is 121-ish level if we do close that in, so just be aware of it. Now looking at the Australian dollar and the GBP, first the GBP looking to break that higher, 134, but it's not leading it, okay, which comes to show you that the euro finally caught up. Okay, we mentioned this yesterday that usually they play a cat and mouse. One of them rallies versus the dollar and then the other one catches up, and sure enough, this time it was the euro that caught up to the GBP. Now it didn't break up a higher, but I do expect it to continue. 135.35 is our next resistance layer. Now looking at the Aussie dollar as well, this is a weekly chart. Unbelievable where we've come from the COVID pandemic height of March 18th, where we sold off to 57. We're about 73. That's an amazing comeback. That's over 400%. So with that said, okay, we are hitting a little bit of a resistance on multi-time frame resistance-ish area. If you look at a monthly chart, you can see that a little bit better. All right, the next real major resistance level is 77.40. Not that far away from it, but we first need to clear this hurdle about 74.85. Now looking at the commodities, gold picking up some momentum over the past couple of days. 1980 trading right now, but was 1960 yesterday, so we picked up some 20 points yesterday. Now looking at oil, it hasn't really followed through. Very choppy trading. We're trading right now at $43 a barrel. Nothing to really write home about. Okay, this has really been choppy. I don't think we have any sort of direction which way the markets will go when it comes to the price of oil. Now looking at the NASDAQ on its dead all-time highs, 12,178, excuse me, as it's breaking new highs for the year. Okay, so really it was Apple that took the lead yesterday. Okay, trading higher. Microsoft also was up on the day, but everything else was selling off. Okay, so really there was a rotation in the markets. When the NASDAQ goes before the stocks, it's something to alert us. Okay, it could be that we'll expect a further sell-off soon. Looking at the Dow Jones, you saw that we actually sold off, didn't really perk up higher. Okay, 468, 469 right now as we are opening up, but still sold off on the day. Okay, this may come to the NASDAQ. The NASDAQ may catch up to this because besides for Apple, everything else did not go higher. Looking at Apple right now, With this is 292. This is Facebook, excuse me. Let's look at Apple right now. This is trading at 127. Now, this is not a gap down. This is a stock split. So you see the actual stock trading right there. And so what you need to do is really take into calculation that it's multiplied by 4. So it comes out to about $515 a share. So with that said, it's hitting all-time highs, okay, even though in this graph it doesn't reflect that because it was this stock split, but it is hitting all-time highs. Now jumping into Microsoft as well, yesterday it did rally to 225. We're only about 5 points away from our all-time highs. I'd like to see some follow-through here, all right, especially as we go into the latter part of this week. A lot of weight is going to be added to the NFP this Friday, so just be aware of it, that it is coming out. Now, when we look at the Old Town School stocks, the JP Morgans, the Alcoas, trading down $100 for a JP Morgan. Alcoa also traded down to $14.56. So, the traditional stocks are getting weaker. The high-tech stocks are still very strong. So that has continued. What is important to note is that the VIX is starting to perk up again, 2641, which means that ultimately the selling that is going on right now is going to perhaps continue, okay, and get a little bit more pressure when it comes to the sell-off. So something to consider going into today's trading. This is Fred Razak. I want to wish everybody a great trading day. Thank you.